Okay, so I wanted to go over this New Zealand dollar pair that I called out, and it was definitely a downtrend on the higher time frame. However, this is going to be really key uh to your trading to stick with rules, right? So let's get to it. So we already know the order block is right there, right? Let's make it this color. Now we choosing our order blocks. There's three ways of choosing them. You got that sloppy way. Um, you got the, I guess, a mid probability, and then you got high probability. Even though this was in a downtrend, what clues that the market leave is what we want to figure out when you're looking at your order block. So let's put right here demand. So that's your demand, right? How do we know to take this demand? Well, it's simple. If you look, so from this wick to that wick left, oh, let me make it a different color. A fair value gap from wick to wick. That's a fair value gap. And then there's another one right here. When you get these wick to wick fair value gaps, it's showing you that the market wants to go back down and touch that demand. Now, what ends up happening with fair value gaps, if we don't know by now, is the market wants to fill in these moves. So the market, if you just keep in mind that when you come into your New York session or whatever session that you are trading in and you see fair value gaps in the demand below, first of all, that's the first steps of it being high probability, right? Then you know that the market wants to fill in this area. This area has to be filled. That's why you sit and wait patiently for it to get filled, right? So let's do that. So, dun, dun. So at this point, the market is filled in these areas. It's filled with this move. So now your next bet is, I'm sorry, hold on. You take the break of the candle of the rejection. So I'm looking at that, see how that took out that previous low right there. Like I like the ones that tipped. Now I could go deeper into it, but I knew that there was news coming and I wanted to get in and I called it out on the Discord, obviously right there, and then it hit TP. So this is what happened. It tipped it, and then that is the move right there that I got in. Right at that break of that candle, I put my stops real tight below it. And I gave you guys, I usually give y'all 1 to 2. So y'all got out. Actually, y'all got way more than was necessary. And now, if y'all tried to go and put y'all stop loss right here, that's a 1 to 1. We don't, no, we don't like those. I try to put it below that wick. If it takes out that wick, I'm okay with taking the loss. And maybe if it sits there and gives me another breaker candle, we can get back in. But sometimes I just don't. I don't want to do that. So I was going for the highs in these wicks because I knew that news were coming. So right there is a 1.24 RR. Now I didn't close it up there. I closed it somewhere around a 4 or 3. However, this was a one. This was a 5.24 RR trade. So what ended up happening is we got in right there, and then it played a little games a little bit, and as you can see, all of that's noise. All them candles are noise. We already got what we came for. The only thing we need to be paying attention is, did fair value gaps get filled? Okay, it did. Cool. Where's the demand or the order block at? Order block got tapped in. We take the breaker candle. All of this is new. This is like noise. We're not worried about the formation of the candles and all that. Just put your trade in, let it do what it do, and go about your business, right? So we took that loss, yesterday? We took a 1% loss on Euro JPY, but you guys took this trade and you guys should be up in profit by at least 1.5% today. Me, you see where I'm up. So that's pretty much my process of my thought process in this trade. I made this video because I had someone that wanted to see what my thought process was in taking this trade because it is a downtrend. And he's like, so what and when is the best time to take these trades when they're on a downtrend? And the magic potion is, let's go there. EMA. I think I already had one in, but I go to the EMA and I only put the 200 in. The 200 is in. So let's go back and rewind this. So at this point, you see it's trading above the 200 EMA already. So knowing that it needs to fill the gap in, which means it's going to wick down there real quick below the 200 EMA and then continue up, and it's already trading above it. That means structures are being broken. You see this structure right here got broken right there. So it was a clear indication that we were going to take this buy for the continuation. And then when you get really mechanical with this and, you do your back testing and all that stuff, then these things become more easier and you'll be able to just take them without thinking. So it's a beautiful trade. That candle right there was news, and then it came down a little bit and then it just shot back up. Now, honestly, I don't know why it came down like that. Maybe, let's see. I want to see on a lower time frame. So on a lower time frame, you had like a little demand right here. So it gave you another chance to get in after TP smashed for you guys. Y'all could have got back in. And you're welcome to get back in if y'all understand the market and y'all want to get more pips out of the move. But what I teach, and what I tell you guys is most likely to go take out the new high. Because somebody sold right there thinking the market was going to sell. And what ended up happening is they thought it was going to sell off. But look, RTP was their stop loss hit. And that's the whole idea. Is somebody sold right there. We got our setup and RTP is their stop loss. So, I mean, somebody got to lose for us to win, right? That's the whole objective. But other than that, that's the setup. Real simple, real smooth. If y'all got any questions, or anything, feel free to just go on the Discord and ask the questions. That's how we learn. So other than that, I'll see you on the next video. Peace.